So regulatory technology, or Rectech, are essentially solutions that help institutions become more efficient and effective in regulatory compliance, risk management, and regulatory reporting. The importance and popularity of Rectech have grown over the last few years. In fact, in a recent report by KPMG, global investments in Rectech have grown by 7-fold since 2017. In 2020, Rectech investments globally have reached about $10.6 billion. So to help us understand more about Rectech, we have Joanne Barefoot here with us today. Joanne is the CEO and co-founder of Alliance for Innovation Regulation, which was honored in Fast Company's 2021 Awards on World-Changing Ideas. She also hosts the global podcast show, Barefoot Innovation. A noted advocate of regulation innovation, Joanne is a senior fellow emerita at the Harvard Kennedy School Center for Business and Government. She serves on the board of Opportune, a fintech company that provides loans and credit services. She's also on the Fintech Advisory Committee of FINRA, the Milken Institute US Fintech Board Advisory Committee, the California Blockchain Working Group Advisory Board of FinReg Lab, as well as the board of National Foundation for Credit Counseling. Joanne also co-founded Hummingbird Rectech, which in 2020 was named the Fintech Hall of Fame by CB Insights. Most recently, Joanne was named Fintech Woman of the Year in 2021 by Finovate and selected to the Forbes list of 50 over 50. That's a long list of accolades, Joanne. We're so happy to have you here with us today. So maybe for the start of this session, I'll just kick off with a question. You have a very, very broad perspective on Rectech. Perhaps you could help paint a picture of the global Rectech scene to our audience today. What are some of the more promising areas for Rectech? And in which areas Rectech solutions are more established? And in which areas you think that Rectech solutions are more experimental in nature?
Great. Well, thank you so much for having me. I'm really delighted to be here. I'm a former bank regulator myself, and I always love speaking to regulatory forums and non-regulatory topics. So in terms of the global landscape, we use the term Regtech in two ways. One is Regtech compliance tools for the industry to use, and the other is Regtech for regulators. And the two are emerging in tandem. They're basically the same technology solutions, but in the hands of either the private sector or the public sector. And they're both growing really rapidly across the world. And they're transforming how regulation and compliance is done in every facet of financial services. You're focused on the securities industry, but we're seeing transformation of how compliance is handled in banking and finance and insurance and every money transmission, really everything that we do financially, we're seeing Regtech starting to transform. And I think I first heard the term Regtech myself in about 2015, maybe. It sort of grew up on the heels of Fintech starting to become popular. And for a long time, the growth has been gradual, and we can talk about why that has been the case. But the moment that we're in now is really an inflection point where we're seeing rapid growth and adoption, venture funds flowing into Regtech, investment in Regtech by larger firms. And I'd say probably in many cases, the leading use case is anti-money laundering, AML. There's a lot of consensus there that sector is broken in terms of how we've been doing it in the past. And but we're also seeing a transformation of the information in the company being brought into digital form, and therefore enabling the company to use tools like artificial technology and machine learning and natural language processing to understand its own patterns of compliance, its own risks, and pinpoint the areas that they need to pay more attention to. So there's a proliferation really in every sphere of Regtech.
Interesting. So you yourself you're a big expert in Rectech for ML, having founded Hummingbird Rectech. and you're still an advisor to the company. Maybe you could give our audience here a glimpse of how Rectech has really changed, you know, how companies approach AML.
Yeah, I think globally that AML has been, as I mentioned, the leading use case. And one of the reasons for that is there's very wide consensus that the way we currently handle AML is badly broken. The United Nations estimates that there's at least $2 trillion a year in financial crime, and that we catch less than 1% of it with the tools that we have now. And yet, the cost of that compliance, even though it's producing such poor results, is extremely high. For most of the industry, it's the single highest compliance cost and risk also, because if you get AML wrong, there are very high penalties for it. And so I think there's been a lot of dialogue for at least 5 years on how can we do this better. The industry is spending so much money and we're not catching the financial crime. So there's a lot of opportunity to do it better at every phase. So if the first step in AML compliance is the know your customer phase, KYC, there are companies that have emerged that are helping to digitize that process, to be able to search databases efficiently, to find sanctioned persons and so on, and to verify who the customer really is. Our analog pre-digital tools for KYC are really poor. I mean, most of our personal information is for sale on the dark web. Our names and the things we use to KYC people, name and address and identity authentication documents and so on, those are no longer secure. To really know your customer, you have to look beyond that. You have to be able to do a digital search. So that's the front end, the KYC, and then the continued monitoring of customer activity also is being transformed through Rectech, where we need to have better ways of understanding the customer's activity. We're seeing a complete shift, and regulators have led much of this, to really trying to understand the patterns of crime. Every financial crime has a typology, and it's hard for us to see it with human eyes on, you know, alerts that are coming out of the monitoring system. But when a computer can look at all the data that you have and understand that human trafficking looks different from structuring transactions or drug trafficking and so on. They have different times, places, amounts of money, and so on, and can find those patterns and then enable the investigators to drill down really and understand the whether there's a problem there or not. And then in terms of the case management, most alert systems today produce a 90% false positive rate. And so most of the time that's being spent on investigations is going into looking at situations where there isn't any crime. And then at the same time, we know most systems are also missing actual crime. They have false negatives too. So by bringing more data, more tools, easing, in the traditional way we do this work, 90% of the time is basically cutting and pasting data into databases to look at it. It's almost clerical work. And today the technology can remove that and make it very efficient for an expert trained investigator to really drill down and find out what the crimes are.
Thanks. So I like that you basically pointed out for financial institutions, Rectech can actually help them not only mitigate the implications of breaches, but also use their resources more productively versus, you know, like you mentioned, copying and pasting and eyeballing and stuff. So that is definitely a distinct change. So many of our financial institutions, for example, have very sort of maturity when it comes to adopting Rectech. Some of them are actually at early stages of adoption. Given that there are such benefits, what would your advice be for some of these institutions that are just about taking the first steps?
Yeah, the technology is maturing, so it's getting easier to adopt it at any stage of the company's situation. But you know, when we digitize anything, we make it better, cheaper, and faster at the same time. And this is not usually the case in regulatory matters. Normally, we can choose between cheaper or better. And if you skimp on one, you suffer on the other side of that equation. So to have the opportunity really to transform technology and get your costs lower, your results better. And the other thing that happens as we move into a system of full Rectech is that the technology enables continuous improvement. Most of the way we do things today are working on legacy technology, often very old core technology, and to update it or upgrade it requires a big capital investment and a lot of risk and a lot of money. We're moving to a system in which we'll shift from sort of our siloed vertical tech stacks into a horizontal platform where we'll be able to plug in better solutions and unplug ones that are no longer competitive, and where we'll be able to have a lot of improvement and updating of the technology work similarly to how we might get an iOS update on the iPhone. That is, that the provider can just push the update out without requiring a whole IT conversion. So there's so many ways in which, as we gradually get to this full system, it's infinitely superior. The place to start is to figure out how to, and I think we'll talk about this in a few minutes further, but figure out how to select a good vendor and vet it, test it, create a so-called sandbox environment where you can run it in parallel with your old system to make sure it's working the way you want to. And usually to begin with some point solution, figure out what your biggest pain point is and find the Rectech that might help with that, and just start trying it and let it spread gradually through the company.
Thanks. There's a conception that organizations need to undergo a digital transformation in order to adopt Rectech. What's your view there?
So my organization is a nonprofit, AIR, the Alliance for Innovative Regulation, and we are working on transforming the entire financial, regulatory, and compliance system to digital technology. I realize that is a very ambitious goal, and it'll take many years to accomplish it. But we do think that this is happening and needs to happen because again, the technology is just superior. We know technology is transforming every other aspect of our lives, from medicine to shopping to entertainment. And the financial sector is digitizing also for the reasons that we have talked about, which means the regulators are also going to have to digitize because they won't be able to oversee a digital financial system using old-fashioned analog tools. So the whole thing is going to shift, and it is a transformation. It's not, the processes we use today were designed on paper decades ago, sometimes centuries ago, and we have automated them, but we haven't redesigned them deeply to take advantage of what digitization can do. If you think about taking a photograph in the analog age, you took a photograph, you had to take it in to be developed into a picture. Today, we take a photograph on our digital camera or our phone, and that process transforms the image into digital information, and then we can do anything we want with it. We don't have to take it to an expert. We can mix and match it and edit it and put it into a report or a letter, or upload it and get it sent to us to hang on our wall. We can do anything we want with it at practically no cost. this is the transformation that's going to happen in the financial system. The information is all going to move into digital form. And when that happens, it's not just automating an old process. It really is, it's different technology. And so the advantages of this are so overwhelming that we will be gradually, but we think urgently, transforming the process. The regulators have an important role to play in this because they are increasingly recognizing that the systems are vulnerable to the rapid change that we're seeing. And their mission, and again, I'm a former bank regulator, their mission of avoiding risk. We see, I don't think we have time to talk about them today, but we see more and more cases where failures are occurring coming from a direction where the regulators were not looking, because that's not where risk used to come from. And we put on top of all of this changes like digital assets and cryptocurrency and central bank digital currency and decentralized finance, DeFi. I mean, the environment is changing so quickly, and the regulators will need really transformed tools, and so will the industry risk managers to stay on top of it.
Yeah, can't agree more with you. We at the Securities Commission Malaysia recognize that too. So we've recently launched our capital market blueprint, the third one, and it has become quite a core agenda for us, both Rectech, and I know you have subtech defined as part of the Rectech, but we sort of segregate it out. So internally within the SC, we look at subtech, and for the industry, we are looking at how we can facilitate greater adoption of Rectech, and that is very much in line with the benefits that you've just highlighted.
Securities regulators have been in the lead in many countries. In the United States, the Securities and Exchange Commission has began using artificial intelligence years ago, maybe about 2006 or 5, maybe even, really to scan the environment, the big data, so-called, the external environment, as well as the reported data, and look for patterns of insider trading or misconduct, aberrations in the activities of traders and broker-dealers. And in the United States, you mentioned I'm on the advisory board on Fintech to FINRA, which oversees broker-dealers, and they are one of the world's top users of data from Amazon Web Services, AWS. They are intensively looking at the data patterns to manage the risks in their portfolio.
Yeah, indeed. We have been observing that as well, and we're pretty excited about that. So from our perspective, the industry too, I mean, so at the end of the day, data is important, right? And in Malaysia, we do need to see more of the industry players sort of coming along the journey as far as data is concerned. So we feel that both the industry as well as the regulator can move ahead together, be collecting data, how we protect data, how we use data, and that helps in protecting investors better, managing risk better. I totally agree with you there. Yeah. But if I could sort of bring back to the industry, and there's a lot of them amongst our audience today, what do you think are the key pitfalls that they have to know in sort of embarking on this Rectech journey? And what are the key success factors for them to sort of extract more value from Rectech investments?
Yeah, I think there are two barriers that make the industry hesitate to adopt Rectech. And one of them is that most of these companies that offer Rectech have started small. They've recently been startups, although there are large companies that are adopting these tools as well. But the cutting edge has been coming from the so-called digitally native or born digital startups, rather than the older incumbents that are trying to add Rectech on top of their old technology. And therefore, most of them are point solutions. They're solving a narrow problem. So often companies hesitate to adopt something like I mentioned, KYC. If you're going to solve just KYC, know your customer, but you have to integrate that into a larger set of work on AML. Sometimes the industry finds it's not worth the conversion cost, even if they think the tool is better than what they have. The other big barrier actually has come from the regulators themselves. This may not be the case in Malaysia, but certainly globally. I say this with affection for regulators. Being a former regulator, I never am critical of them. They've been using the best tools that were available. But regulatory authorities are built to be careful and methodical and cautious and risk averse. You know, that's intentional. That's how they're supposed to be. But it does make them slower than the market is moving today. And I mean, my advice to regulators is they have to find ways to speed up, and it's not going to be easy. But so many people in the industry see a Rectech solution that they're interested in, and they're worried that their regulator won't be comfortable with it, and so they don't adopt it. That is, in the next few years, I think is going to shift 180 degrees. And we're going to find that as regulators, as you were saying, adopt these tools, the industry will find themselves criticized for not using better, newer technology. Going back to AML, there's dramatic examples that you find more crime and can report it efficiently and effectively if you are using a better tool. So I've heard regulators start to say this in public, you know, within the next few years, we'll be criticizing you for not using the newer technology that produces better results. In the banking and lending industries, an example is non-discriminatory lending. There are much, much better tools today for finding patterns of unintentional bias in lending that are accidentally harming women or different minority groupings, and regulators are beginning to look at this and say, we really expect the industry to upgrade. So I think that regulatory barrier will be coming down, and so will the point solution problem. There are examples around the world in the banking arena. There's an entity called Orchestrate run by ING Bank, which is helping some smaller Rectech companies integrate with each other, so that if you want one of them, you will create an integration that then can enable you to integrate all of them in a chain. And so people are working on that. The other problem for getting started is just how to choose a company. And again, that's hard, but the Rectech industry is maturing enough that it's getting easier and easier to do that. You mentioned that I co-founded Hummingbird, and it's just incredible to see the rapid growth of adoption. Once these companies start to prove themselves out, they're really they can become safer because other people have vetted them, and you can rely on some of that.
Okay. It's interesting. So I'm pretty sure we have some entrepreneurs amongst our audiences today who would definitely love to hear more about your experience with Hummingbird. Maybe you can tell us what it was like setting it up, and the journey you underwent with it, and what were the challenges, success factors, things like that.
Yeah. It was one of the best things I've ever done. You mentioned at the beginning that I was recently selected Fintech Woman of the Year, and also to the Forbes 50 over 50 list, which is women over 50 who are doing interesting things. So I'm definitely the first person over 50 to be Fintech Woman of the Year. I'm very far over 50.
It's very inspirational.
Thank you. Thank you. So for me, I've always loved technology. I've been immersed in technology for a decade. I did my work at Harvard, you mentioned. As a senior fellow, I did research on how technology is changing the financial sector and how to regulate it. But none of that prepared me for starting up a tech firm. I learned so much instead of being at 60,000 feet talking about concepts and so on, just to work with engineers who are designing a new solution. And for those of us who are not techie people, I can't write code, for example, we don't have the same tool set. So one of the things I have done, not on Hummingbird, but in my general work, has been to bring together regulatory people with tech people. And you find that regulators are constantly working, and the industry too, constantly working with problems you don't really think you can solve fully. You can do it a little better or a little worse, but it's just insoluble. And you often find that the tech people actually have the solution, but they don't know about the problem, or they don't think it's an interesting problem, which is not true. These are very, very interesting tech problems. So my advice to companies that are coming into the Rectech world, I think my main piece of advice is to get a balance between the reg side and the tech side. I see a lot of failures in Rectech when they are lopsided. If you have regulators trying to start a Rectech firm, they often don't have great technology. And when you see technology people saying, oh, this is a great growth area, you know, we'll start a Rectech firm, and they don't deeply understand the regulatory environment, the subtle pitfalls and so on, they can't build it right. I like to see an evenly matched set of founders and drivers. And then for me, again, as a non-tech person, just seeing the different ways of working, you know, becoming familiar with the tools for agile design and, you know, things like pen testing and A/B testing. And I mean, I was completely unfamiliar with sort of how you quickly build a solution. Another thing I learned that I didn't understand previously was how much of our whole system is built on open source code, and the need to not reinvent the wheel, just to use open source tools. And the regulators, by the way, need to do this too and share their tools. I was hardly even familiar with GitHub, for example. I didn't understand that there was a whole repository of open source code there for the taking, which has been for free, which has been in many cases really vetted. You know, it has lots of eyes on it. People have already found the bugs and the problems and shared that back to the community. The whole open source movement was just completely eye-opening to me. And I don't want to spend all our time on this, but the other thing is, I think founders tend to be, they underestimate the difficulty. I often hear founders say, if I had, especially in finance, which is so heavily regulated, you know, they often say, if I had known how hard this was going to be, I wouldn't have done it. I'm glad I did, but you know, if you're going to be a Rectech firm, you really have to take the regulation seriously. Your clients have everything at stake if the tools don't work. That's why they're cautious. And then they have, again, sort of a culture of skepticism about doing something new or doing something quickly. And so you just have to get it right.
You spoke a lot about how you came into this area and you learned a lot along the way. And you touched on talent, right? So a lot of the financial institutions that has recently participated in a survey we did sort of fed back about the need to develop talent. From a country perspective, how do you see, I mean, what will be key ingredients and what kind of talent is required from your perspective?
Yeah, so if you're a small entity, you can rely on vendors to a large extent. I mean, think about the problem. Everyone needs basically top engineering and designer talent to create the tools we're going to use. If you're a small company, you're not going to hire an engineer from Google because you won't be able to afford them, unless you're a tech company and can give them some stock, but that's different. And if you're a large company, it's also hard to attract top talent because, frankly, there's a lot of people don't find it exciting to work in some of these industries. Tech people often don't. They think it's boring. I mentioned before, it's not boring at all. You know, engineers are just are attracted to interesting tech problems. And that's part of the way to sell it to, I mean, at Hummingbird, we have said to people, we're not talking about compliance. We're talking about saving people from human slavery, human trafficking. You know, that's what you're finding in these financial crimes. They're not just victimless crimes. It's trafficking in drugs and weapons and looted antiquities and endangered wildlife and human beings. There are 60 million, no, there are 40 million people estimated to be trapped in modern human slavery today, of which 10 million are children. So these are really, I mean, these laws and regulations are there for a reason, you know, they really matter. So if you can get, attract talent by telling them the bigger story, we're protecting investors, we're fighting global financial crime, which is on the rise, as part of it. But you want to see that your vendors have that top digital talent, not the old analog era tech talent. And then you want to, if you're a large company, you want to get those people on your own team. And if you're a regulator, you do too, and you want to have data scientists. And some regulators are really building this out and some are nowhere with it so far. But it's an exciting moment. And again, magical things happen. Another piece of advice I have on talent is sort of borrowing from the Broadway musical Hamilton. There's a song that talks about being in the room where it happens. The tech person needs to be in the room where the decisions are being made, not just implementing something. You know, they need to be there at the design phase of what you're doing. Most companies need to retrain all their current employees in digital technology, you know, IT, just everything that's changing, cloud computing and so on. And then they also need to attract either engineers and designers or vendors that have the best. I'll say one more thing too on design. You know, millennials are now the largest generation in the history of the world. I'm sure there are many in our audience today, possibly including you. I don't know. I'm a baby boomer myself.
I don't think so.
But the oldest millennials are turning 40 and they are going to dominate the workplace, the consumer marketplace, the investor marketplace, the culture, everything. Indeed. By virtue of numbers. And they are all digitally native and they expect good technology. And I expect good technology too. I'm not patient with clunky, terrible design. So this is going beyond the Rectech piece, but it's partly on the Rectech piece. Why do we have compliance tools that are terrible old technology? You know, young people come into these jobs and they say, why are we doing it this way? And again, not even getting the job done. So creating that environment where the design, the user experience is top quality and is constantly improving is also part of the talent issue.
Yeah, I can't agree more. I have a bunch of millennials in the team and I'm pretty sure they will attest to that as well. So besides talent, you brought up very good points around talent and the need for greater motivation and being part of the process is really important. But besides that, what do you think is required within the ecosystem as a country for us, I suppose, to sort of encourage more Rectech startups, perhaps, and more of incumbents, perhaps, to innovate, use technology in the space of Rectech? Yeah, what else do you think would be important in the ecosystem for us?
So it is an ecosystem issue. You can't really fix one piece of this ecosystem and get where you need to go. You need to fix it all. And I do think there's an important role for regulators to play in this. I have just gone on the board of a nonprofit called Elevandi, which has been created by the Monetary Authority of Singapore. We just had our first board meeting yesterday, and working on how do you create the full ecosystem around what's needed to modernize the regulatory and compliance world. And how do you encourage an environment that is fostering a lot of startups and success for startups? The MAS, Monetary Authority of Singapore, has been really one of the world leaders without a doubt in this whole phase. You need a venture capital community that is robust and isn't afraid of regulated spaces like the securities industry. You need the universities to be producing people who are coming into these tech fields, and you want those to be diverse, by the way. There's so much evidence that diverse teams innovate better than non-diverse teams do. So we need to be doing things like bringing more people into the STEM fields in in their educational levels. What am I leaving out? You need a culture shift in the industry in most cases. You need leaders in the industry. Companies should not be putting their tech work out on the far fringe of what they're doing. They need to bring it to the center, and that comes to the leaders in the industry not being afraid of new technology, understanding that they're going to have it to compete, and then coming together to build the rest. I would say, in general, there's two secrets to successful innovation that often are not well enough developed. One is you have to have a safe space for experimentation. You can't innovate if you can't try things that might not work. So for the industry and for the regulators, we need so-called labs or sandboxes. My organization, AIR, recently brought in the former head of innovation at the UK Financial Conduct Authority, Nick Cook, who has really been a world leader in creating these new tools, regulatory sandboxes and tech sprints, hackathons to improve regulation and so on. And setting up a place where you can try something, and if it doesn't work, it won't cause harm, which we have very little of in this ecosystem today. Very few of those safe spaces. And secondly, pardon me. And secondly, much more collaboration. Much more collaboration. That's how you innovate, is you bring lots of diverse talent and perspectives to the table and really just work together.
Yeah, I really like that you brought up collaboration as a key pillar of success, really, for innovation. And I do foresee that there's a need for the different stakeholders, be it entrepreneurs of Rectech companies or incumbents in the financial services industries, even regulators. I mean, highlighted that a couple of times, need to play a role. And even, innovators or accelerators and all. I do see the importance of all these different parties to come together to collaborate. From your experience, sitting on the various boards and all that, what sort of collaboration platforms are the most efficient? How should Malaysia go about this?
That's a great question. I mean, part of it is just moving to agile design. I don't know whether most of our audience is already doing that or is even familiar with it, but traditionally we've innovated, changed things in a linear or a waterfall process where, somebody comes up with the idea and they test it and somebody builds it and somebody checks it and so on. Now, all those people should be there at the beginning, working quickly on problem solving together. And that can be in person, or obviously in COVID, it can be electronic. But, you know, just using tools like Slack and, you know, just basic ways of getting teams together to work on problems, I think is critical. And then I really think key to it, a lot of the problem is that the compliance world tends to sit in its own silo in most organizations. And then for the regulators themselves, there's a very big barrier in most places to high collaboration, because they're regulating the industry, they need to keep a distance from it. And they're just going to have to build better ways of sitting down together. I'm a big advocate of tech sprints. I mentioned a minute ago, the UK Financial Conduct Authority adapted the hackathon format for regulatory problems a few years back. And they work like magic. You bring the regulatory experts and the industry together with software engineers and designers who, as I mentioned before, have a different toolbox, and give them a problem to try to solve. And at the end of the period, whatever it might be, a week, you don't just have a working group or a white paper, you've got a prototype of a solution that you can then begin actually working on innovating or implementing. And you know, tools like that, intensive collaboration, and again, with the regulators involved as much as possible. My organization has put on 8 tech sprints. We're working on a new one focused on emerging markets, on women's economic empowerment, with the Gates Foundation and the World Bank. We just put on a webinar for regulators on how to conduct a tech sprint, and we had dozens of countries participating in it. It's just a way of learning quickly, breaking down the barriers, and intensively collaborating with people who have different skills and perspectives.
That's interesting. Has there been any successful sort of use cases for the capital markets or financial institutions that, you know, our audiences can sort of pick up from?
So I don't want to name company names, but I would point again to the AML area, and then I would point to a lot of successful use cases just in the efficiency of risk monitoring and compliance monitoring, where again, companies are finding that they can either reduce their costs. Some of them don't even want to reduce their costs. They just want better results, better efficiency for what they're doing, and finding that they really are producing better outcomes.
Okay, thanks. So maybe just to sort of cap things off, from what you see, what are some of the more frontier Rectech areas you feel that or we should be paying attention to, or you are currently paying attention to, that's, you know, emerging and exciting?
I think we've covered a lot of them. Speaking of it being an ecosystem shift, one of the enabling factors here is moving into cloud computing environments, which are so much more efficient. You only pay for the amount of technology you're using. It's more nimble and powerful, really, to be able to use data intensively. And as we see the industry and regulators doing that, we're seeing more and more adoption of Rectech. I think that's on the horizon. I don't know if this is directly responsive to your question, but mentioning that I'm on the FINRA advisory committee. FINRA has been really looking at the frontiers of how tech is changing the broker-dealer space. They surveyed, what uses of AI are going on in broker-dealers, for example. And then we've tackled the hard issues on the horizon, like the advent of quantum computing, the use of deep fakes. That session really was terrifying. It was, just the prospect of people being able to impersonate other people. The cyber, we haven't talked too much about the cyber risk issues, but obviously as all of this information is digitized, there's growth in cyber risk, but also the advent of better tools for managing that. The shifts into crypto assets I mentioned before, all the issues around how that might change markets and so on. It's a reminder that if people wait until it's clear what to do to start to plunge into the use of Rectech, they're going to be too late. I mentioned that we at AIR brought in Nick Cook from the Financial Conduct Authority. We've been quoting him for years, saying that at the FCA, they realized that if they waited until it was crystal clear what they should do, they would be, his quote was, they realized they would be accelerating backwards. That if you took 2 years to try to figure out something to do, you'd be 10 years behind where you need to be. And you just have to move forward with it. So I don't know if that's exactly responsive to your question, but we need a full culture shift to embracing the necessity and the opportunity that's coming with these technologies. And we need it from top to bottom in the industry and in the regulators. And if we do it right, we can solve a lot of problems. We can protect investors much better. We can keep markets much more stable. If we had these tools in the US prior to the subprime mortgage crisis, we might have been able to avert the Great Recession, which hit the whole world, because the regulators couldn't see that these risks were gestating. Even though the practices were in plain sight, regulators didn't have enough data to see the interconnectedness and risks that were percolating in the industry. So, there's an opportunity to just do massively better than we've ever done before through better technology.
Oh, that's certainly very interesting. I do agree a lot with you that use of technology, be it Rectech or supervisory technology on the regulators front, I think it's definitely here to stay. Right, and like you said, the better we do at it, the faster we look at embracing it, the better it is from a regulator's perspective, the better it is for investors, and the better it is for market, and for intermediaries or financial institutions. It gives them a lot more, agility in mitigating breaches, and along with that, sort of reduce cost when it comes to cleaning up the breaches and so forth. Like, there is definitely a lot of benefits. Your messages ring loud and clear. Yeah.
Great.
So we've pretty much come to the end of the session today. We thank you very much for all the insights and experience you have actually shared with us. Any last words before we close off this session?
My last words are, try to speed up.
Okay.
That's what I hope will echo in people's ears. Don't wait, speed up.
Thanks.
Thank you so much for having me. It's been a delight to talk with you.
Thanks again.